Yo, wake up and look at the charts because gold just smashed through $5,300 and silver is chasing 100 like its hair is on fire. We aren't looking at a normal market cycle anymore. We are witnessing the total repricing of real money in a world that's finally run out of patience with paper. If you've been following the hustle, you know I've been warning you about the messy middle and the fragility of the dollar for months. Now, the explosion in precious metals is proving that the big players are no longer just hedging their bets. They are heading for the exits of the traditional financial system. Let's talk numbers. Gold has surged over 70% in the last year alone, delivering its strongest performance since the legendary run of the late 1970s. This isn't just a safe haven play, it's a massive vote of no confidence in the central banks that told us inflation was under control while the debt hit 37 trillion. The first major reason for this moonshot is the smart money migration, led by central banks from Poland to Brazil, who are buying gold at record levels. They are diversifying away from the US dollar faster than ever because they see the writing on the wall regarding fiscal sustainability and geopolitical weaponization of currency. In 2025 and 2026, we've seen emerging markets realize that holding treasury bonds is like holding a promise from someone who spends way more than they earn. By moving 25% or more of their reserves into physical gold, these nations are building a fortress that doesn't depend on another country's printing press. Then we have the Federal Reserve's pivot where they cut interest rates 3 times in late 2025 despite inflation remaining stubbornly sticky around 3%. When rates go down and inflation stays up, real yields drop into negative territory, which is the ultimate rocket fuel for assets like gold that don't pay a dividend. But gold is only half the story, because silver has officially broken its decades-old resistance and entered what we call the price discovery phase. While gold is the king of wealth preservation, silver is becoming the indispensable beast of the high-tech industrial revolution that is currently unfolding. Silver is currently facing its 5th consecutive year of a structural supply deficit, meaning we are physically using up more silver than we can dig out of the ground. Mines are struggling to keep up, and recycling isn't filling the gap, which creates a supply-demand squeeze that could push prices into triple digits very soon. Think about the AI explosion. High-performance data centers consume 2 to 3 times more silver than traditional servers because of its unmatched electrical and thermal conductivity. Every time a tech giant builds a new AI farm to train a model, they are effectively locking away thousands of ounces of silver in hardware that is rarely recycled. Add the green energy transition to the mix, where solar photovoltaic panels are projected to consume nearly 30% of all industrial silver by the end of this year. We are trying to electrify the entire planet at the exact same time that the world's most conductive metal is becoming increasingly scarce and expensive. Geopolitical instability has reached a boiling point in 2026 with conflicts in Europe and the Middle East, creating a permanent fog of uncertainty over global trade. In a world where supply chains can be cut overnight and assets can be frozen with a keystroke, physical metal is the only asset that has zero counterparty risk. Look at the US dollar index, which hit a 4-year low recently after the administration signaled that a weaker dollar is better for American manufacturing competitiveness. While that might help exports, it's a direct tax on your purchasing power, and investors are fleeing to gold to protect what's left of their hard-earned savings. We've also seen a massive rotation from institutional investors, with gold ETFs seeing their second strongest year on record as fund managers realize that bonds are no longer a safe hedge. When the traditional stock-bond correlation breaks down, professionals start looking for real assets that can stand on their own during a stagflationary shock. Retail investors are also waking up to the trap, with bar and coin demand hitting 12-year highs as people move their paper wealth into something they can actually hold. There's a growing realization that the banking system is just a ledger of promises, while a gold bar is a piece of the universe that doesn't require a password or a bank's permission to exist. Even Goldman Sachs has raised their price targets, projecting gold to hit $5,400 as they acknowledge a structural shift in global demand that isn't going away anytime soon. This isn't just retail FOMO. This is the biggest financial institutions on Wall Street admitting that the floor for precious metals has permanently moved higher. Let's talk about the gold to silver ratio, which is currently screaming that silver is still massively undervalued compared to its yellow cousin. Historically, when this ratio compresses, silver doesn't just catch up, it explodes with a vertical move that can double or triple your position in a matter of months. Some analysts are calling for silver at $150 as soon as next month, And while that sounds wild, remember that we're in a price discovery zone where history is no longer a guide. When inventories in London and New York are at multi-decade lows, it only takes a small spark of panic buying to create a squeeze that breaks the charts. The messy middle class is especially vulnerable right now because they are the last to leave the burning building of fiat currency. While the elites and central banks were quietly stacking gold at 2,600, the average person was focused on their credit card points and their 401k balances that are being eaten by inflation. Don't be the person who buys at the very top out of pure desperation. You need to understand that pullbacks of 10 to 15% are healthy and expected even in a mega bull market. These resets are actually gifts from the market, allowing you to build a position before the next leg up to $6,000 or $10,000. Why is this happening now? Because the era of free money and zero interest rates created a debt bubble so large that the only way for governments to pay it back is to devalue the currency until the debt becomes meaningless. Gold and silver are simply the mirrors reflecting the true declining value of the paper in your wallet. We are also seeing a shift in the petrodollar system, with major oil-producing nations increasingly accepting other currencies or even physical gold for their energy exports. As the dollar's dominance as the global reserve currency fades, the demand for a neutral, non-sovereign store of value like gold is naturally filling the void. Industrial demand for silver is being supercharged by the proliferation of edge computing and the Internet of Things, which require ultra-pure silver for specialized sensors and circuits. We are building a world that literally runs on silver, but we are treating it like a secondary metal instead of the strategic asset it truly is. Even the automotive sector is shifting, with electric vehicles now projected to dominate the market by 2027, requiring 50 grams of silver per car compared to just 18 grams in a traditional combustion engine. Every step we take toward a cleaner future is a step that increases the demand pressure on a metal that is already in short supply. The technical charts show that gold has smashed through all-time highs over 50 times in the last year, which is a sign of a powerful institutional-led trend that has massive momentum behind it. This isn't a bubble that pops overnight. It's a multi-year repricing event that is just starting to get the attention of the general public. For the person making 100K, this is a wake-up call to stop hoarding cash that is losing purchasing power every single hour and start thinking like a central banker. You don't need $1 million to start. You just need the discipline to trade some of your declining paper for a piece of real, enduring history. Many people ask me, Freddy, is it too late to buy? My answer is always the same. Look at the debt and the printing press and ask yourself if you think the government is going to stop spending money they don't have. As long as the deficit is growing, the value of your gold and silver is protected against the inevitable consequences of that spending. We are entering a period where the floor for gold might be as high as $4,000, meaning any drop to those levels should be seen as a once-in-a-lifetime buying opportunity. The days of sub-$2,000 gold are likely gone forever, buried under a mountain of new currency and global policy uncertainty. Silver is even more explosive, with experts suggesting that a move to $70 an ounce is now the base case scenario rather than a high-end target. If the industrial demand continues to outpace mine supply, we could see a physical shortage that sends premiums on coins and bars through the roof. My advice to you is to ignore the daily noise and the gloom and doom headlines and focus on the structural reality of the 2026 economy. Own assets that the government cannot print, that the banks cannot freeze, and that the world will always need to build the future. If you're ready to take control of your financial destiny and escape the paper trap, hit that subscribe button and join the Freddy Hustle community. We are navigating this collapse together, building real wealth 1 ounce at a time. Let's get to work.